Well, hi, everyone. Thanks for being here. I'm Eric Finns. I'm a Vice President of Growth Climate Group. We work with Darren and the team at Triangle for the last 20-ish months or so. So maybe not probably before the pitchers and catchers, but I'd say we're a little further than that if we're going to stick on that baseball theme. But we are excited to be the first panel. It's nice to be able to kick it off. We'll run a tight ship here. I'm glad we're not the last panel before happy hour. So there's that working for us. We're here to talk about food and farming. There's a supply chain of food and a food chain of capital, and the interconnectivity of all of that is just really critical for both climate and profitability. Regulatory compliance is here, whether we want to recognize it or not. If it's not here domestically, it's here internationally. And to stay competitive, companies have to, seeking to do that business, really have to comply with that. So it's how they choose to comply that directly impacts both the climate and their profitability. And one company's scope 1 and 2 is another company's scope 3. So we're all interconnected here. We all got to get this thing right. We're going to try to get to 3 topics really quickly over the course of this panel. First is data and capital. The second is supply chain. And the third is regenerative ag. We've got a great panel of experts. We practiced in one order, but we're all sitting in a different order. So we'll just work it out on the fly. We can start with Mike. We're going to do brief introductions and we'll get right to it.
Great. Yes. Hi, welcome everybody. I'm Mike Aquino. I'm the sustainability lead at the International Dairy Foods Association. So we process about 90% of the U.S. milk supply, our member companies. Thanks to Infor, they are a member company because they provide software services tools to our manufacturers. I have a food and ag science background, and then for about the last 10 years, I've been in the corporate sustainability ESG space.
Katherine.
So I'm Katherine Foster. Clearly, it's changed a bit since COVID. I'm probably the only person who looked better during COVID. And I am the World Economic Fellow leading the European Food Innovation Hub on behalf of EIT Food. EIT Food is the European Union's lead innovation initiative, and it works across Europe, but also globally on a number of missions, including sustainability, health and nutrition, and transparency. Before that, I'm actually a recovered Canadian climate diplomat, and I've been working on climate innovation for about 30 years.
Peter Adriaens, University of Michigan, Center for Digital Asset Finance. Asset is both the currency as well as the physical infrastructure asset. Specific to this project or to this discussion here, I've been working with Great Lakes Ag and beyond to link, I guess, the whole carbon risks from farm to Wall Street, because a lot of 45% of farming in the United States is funded through the agricultural bond markets. And so there's lots of opportunities there as well as through the actual food supply chain. So we'll talk more about that later on.
Zach.
Hi, everyone. Zachary Pogue. I'm coming from Washington, D.C. I have several roles for an ag tech company called Algae, strategic advisor, former head, research innovation, a couple provisional patents on soil microbiome and how we do that interaction. And I'm also a venture capitalist with a planetary health fund that's exploring novel new ways to really transition our world to more decarbonization. So pleasure to be here.
So let's jump right into it. For data and capital. So we need to understand, how do we get the data? What is the data? What does it say? But how do we actually get it? Triangle certainly has a solution here, but I think these folks working with their expertise do as well. And it's both a domestic and a global challenge, especially, again, if you want to engage in global commerce, you got to be able to comply. You have to know what your data says. You have to know how to use it. So Peter, I think for you first, what are the various financing and credit facilities available in this space?
When you look at agriculture, I mean, there are a number of agricultural companies that actually have set up sustainability-linked credit facilities. You're looking at Bunge, you're looking at Kellogg and others and whatnot. So there are facilities out there. Again, those depend on the data. The big question is, how do you get the data? How much do you pay for the data? One of the recent discussions that we had with off-takers, and the Star of the West is a major off-taker in the Great Lakes region, and they say our best farmers that have the most sustainable practices are the least likely to actually share their data, because they don't want to give that stuff up for free. They'd rather stick it under their mattress than actually, give it away for free. And so the whole question now is sort of what is going to be the cost? I guess the cost and opportunity, I guess, both from the financial side as well as from the food supply side, to be willing to pay for that data that they need to report all the way up and downstream in that in that marketplace. So a lot of challenges there.
Yeah, and Catherine, jump in here, but the incentive structure has to be fundamentally changed in this process, as Peter just said. There's a competitive advantage for not sharing the data, but that data has to be sent along this supply chain.
Absolutely. And we're seeing also a bit of a rift because of new data tools and capabilities that are sort of overlapping and overtaking some of that granular data that the farmer is normally able to give. And what it's doing is sort of disincentivizing the entire value chain from participating. So we have to make sure that that cost benefit sharing goes all the way down to the farmer. Especially in Europe, we're dealing with a lot of small hold farmers, Africa and other regions, where we can actually, if they're willing to share their data, we can then aggregate that into more usable pools of data for various tools and frameworks. I think that's the other barrier that we need to talk about, is what data for what instrument.
That makes a lot of sense. And, as we talk about capital too, public policy is underlying all of this. But what is the role of private finance in terms of sort of complementing that public policy and those regulatory regimes that are out there? Zach, you seem to be most focused on that piece of it.
Yeah, definitely. So again, as an angel investor and as a venture capitalist in this world, for True Algae, what they do is they actually use algal metabolites, something derived from the algae, in order to help improve the soil health and water health. And what's interesting is that the product itself is not a fertilizer. It has no NPK in it. It's 000. Yet it has all the effects as if you put a chemical fertilizer into the ground. And again, it also has these metabolic effects like a biostimulant. But the interesting thing is the definition for what the product isn't in the Farm Bill. It's not a biofertilizer, it's not a biostimulant. So when you have these new definitions, then that's when you need the private capital to come in to help educate people on the Hill as to how to improve the Farm Bill, the definitions, and then that's how you can get more private capital into the sector to catalyze those efforts.
Thanks. And then Peter, to you, one of Triangle's superpowers certainly is understanding what baseline emissions are, tracking those emissions and understanding sort of that delta, and particularly the regulatory regimes that are out there are intended to allow for folks to disclose what their carbon emissions are, but understand what their climate risks are and account for those. So how does that, as you turn to particularly in farmers, how does that incentivize, how does that improve access to capital, certainly via sustainability linked loans, those types of other mechanisms that are out there?
Yeah, that's actually the focus of the project, to sort of not only have farmers depend on the Farm Bill and subsidies, I guess to start becoming more sustainability oriented, but actually figure out how the capital markets can play a role in that. And we're starting to see that the ag bond market in the US is essentially bought by 174 institutional investors. They have gone to the ag bond issuers and said, all right, so is this sustainability linked? The answer is it is not. So then the question becomes, okay, well, as in the investor relations, what is the kind of information that should be disclosed, and how does that trickle down or trickle up, I guess, from bonds to ag banks to the lenders to the farmer? And what we are seeing in particularly sustainability linked bonds, I mean, an ag bond is very similar to a muni bond sort of in structure. So we're seeing up to right now 54 basis points, I mean, in potential discounts, I guess, when that kind of information is embedded with the loans. When I say up to, a lot of it depends, of course, I mean, kind of situation year on year, Fed rate, I mean, all these kind of things. But that could trickle down, I mean, to the farmer as well, because now there's going to be, sustainability linked disclosed capital versus non-disclosed capital. So the lender can also borrow their capital at a cheaper rate, right? So you start seeing sort of a bifurcation in a way between traditional and sustainability linked with a financing benefit. The additional benefits, of course, are the reassessment of land value, right? I mean, to your point.
Yes.
And you could probably amplify that. I guess, I mean, say chemical fertilizer versus, for example, your fertilizer, your land value goes up. The insurance there's insurance impacts on that. It ultimately becomes a capital stack. I guess, or a revenue stack that ultimately becomes the incentive. As long as we can at least reach $50 an acre, that's kind of what we're gunning for right now, I guess, to incentivize the farmer to drive scalable adoption of regen practices.
And to give a real life example for True Algae. One of our investors on the cap table actually, invested in us so that we could put our product into land that they found that was very cheap in the Midwest, that was degraded, had poor soil microbiome, and they put our product on there. They were able to get animals there, and they were able to improve the quality of the soil. So they were able to get it at, X cents on the dollar. Now it's been improved 30 or 40%. And so that was an investment strategy. So there's lots of ways in which you can utilize these soil inputs for that effect.
The land, becomes an appreciating asset. Right?
Right.
Mike, I'm going to turn to you in 1 second. Katherine, I want to go to you first really quickly. We'd be remiss here at Climate Week. I don't know how many panels we went to, but without saying artificial intelligence or the impact of AI. How does that address, what are the challenges in financing and accessing AI models in this space? And how does it change some of the financial incentives, past prediction, soil testing? I mean, it feels like the impacts are inevitable and endless.
Mhm. And I think we're coming at it from both angles. So we also have, a lot of investment in this sector is largely on the front end technologies, especially the digital technologies. And there we see AI at the top, and AI models could be anything from integrating satellite data, soil data, and being able to take that mix for the actual specific instruments. What we're also seeing is the innovation on stacking and layering existing solutions. So you mentioned methane reduction, and I work with Meta AI out of MIT, which is actually enabling the loop back into the financial instruments for the farmers on the ground by suggesting we're going to work with all of the methane reduction formulas that are available, whether it's soil or actual feed, and then being able to use the biome predictability AI model to choose the right one or the best fit. So going from a 10% reduction up to 30 to 40% reduction. And then being able to aggregate and pool that data for the financial instruments, the carbon credits and other types of financial instruments for the farmers themselves.
Great. Mike, supply chain.
Right.
So as we see the movement of information across the supply chain, how do we ensure that that data is credible? And for you, especially, with IDFA, what are the scope 3 data challenges for pooled commodities?
Yeah, okay. I'll build on what she just said about the meth AI example. So we know that, sorry, but coming out of both ends of the cow, there's a methane issue. We have manure and we have burps, and there are technologies entering the marketplace to address this. My members and financial institutions that might be interested, I think that if they're going to get involved financially, they want to know that the data measurement and monitoring is legitimate. So we're very concerned about that. And we also think we'll be held accountable for our scope 3 reporting. But a big challenge, an example in a nutshell, is we could have this solution deployed on various farms in a supply shed or in a region. We pool that milk pretty early in the value chain. Then we process it, we pull it apart to its different components to make specialty ingredients. And so we need digital solutions with guardrails to track that process so that I can say, well, there's 100 farmers out there, 10 of them are deploying a new technology effectively. How does that all roll up in the scope 3? That's what we've been trying to deal with right now.
Yeah, I would love to add on to that, because I think that's also where we see the digital solution layering up. And we take examples. One of the things about my institution, the EIT Food, is we're able to do that pre-competitive innovation and bring researchers from across European universities and startups, everyone together to really figure out how to ensure that the research and the innovations are providing accurate data. And when one of the solutions that we found is sort of a cross-sectoral one from biofuels, we were trying to do biofuel traceability. So we came up with the digital solution for the traceability, but it's bottom of the barrel mixed. And as it goes up the supply chain, how do you actually trace that? Then we sort of added in DNA testing. How do you pay for that? So it really is sort of a moving target all the time. And even the measurement instruments themselves, 7 years ago when we created the methane category for the burps, it was actually like in the farm in the barn hood. Now you have these handheld sensors and also other types of drone sensors, satellite sensors that can actually layer up that measuring to ensure the credibility and transparency.
That's amazing. Zach?
I just add about the tests. So as we work to prove that our soil input is actually doing a positive effect, everything from soil organic carbon to natural nitrogen fixing, the tests I had to do were coming in at $1,000 to $1,500 per soil sample. And then you have to do that in 3 different geographic locations and multiple samples over time. So it gets very expensive. But it is all leading towards that science of M&V and the ability for us to understand the genomics. Because once we do, our methodologies improve, and then we can get much more credible credits and high quality ones.
And I do want to press on 2 specific examples, one from you, Mike, and one from you, Peter. But I also was neglected to mention, I'd love to turn it to you all for questions at the end. So if we have time, that's why we're moving really quickly. It's a lot of stuff to cover. Mike, when we were talking, I think it was last week, not all commodities are equal. Accessing the data for each of those commodities is also very different. So the example I wanted you to jump into, obviously unique to IDFA, is, as the process of milk comes through from the farm into the production cycle and down that supply chain, how are you ensuring that the data, particularly scope 3, that data granularity is granular enough and appropriate and consistently allocated to the parties involved, which is a real challenge?
Yeah, so at a trade association level, we have various working groups that are trying to tackle that and fill sort of gaps in the existing standards that guide us in how to do our corporate accounting. But I'll be honest, we're not there yet because there's some flexibility. Some of my members might use secondary data, and larger, sort of more mature members, sometimes that have more direct supply chain relationships, are able to get more granular right now. So we're mixed bag. But one of the ways we're working on this and advocating in the standard setting space is for chain of custody models, basically that traceability, that handoff documentation through the supply chain that don't require complete physical traceability. But that's why we need a tech solution to be that guardrail. And it's because we really do believe if we have to get pushed towards segregated supply chains. So, your milk is relatively decarbonized. I want that, and I have to only send a truck to you. We're going to lose efficiencies in many other ways. So we're working against it.
Well, I might know a tech company that might be able to help provide a solution. But Peter, that's a great segue to the example I want you to talk about, which is the McCormick spice example that you talked about, right? How do companies get rewarded for providing that, in turn, having those better terms on access to capital?
Right. So it's again all about incentivization, right? So farmers, they'll lend them based on their own credit rating and whatever their crop yields and all of that. So what McCormick has done, for example, is contracted things with a lot of its providers and its suppliers, and essentially given similar lending terms that McCormick gets instead of what the farmer would get. So basically, that now suddenly becomes a very attractive in terms of payback, the term pay, interest rates, everything else is that they can now get. So I think things like that are very creative solutions to incentivize the farmers to provide data.
Last topic, regenerative ag. So the economic benefits of regenerative agriculture, from reduced borrowing costs to monetizing carbon attributes through cover cropping and no-till farming. Mike, can you give us sort of the high-level definition of regenerative ag? How does it work? What should it include? What are some of the strategies and methods out there?
Yes, we'll start with that. And I'd say it's still being figured out in my commodity specifically. In US farming systems, it's not exactly clear how to implement regenerative ag at scale on dairy farms, but it is happening. But to start with that high level definition, it's thinking about producing food without depleting the ecosystem. But it goes beyond that. It's about improving the ecosystem. So I hear some folks say sustainability in farming is maintaining the ecosystem. So not depleting it. Regenerative ag, regenerating is improving it. the principles often center around soil health. I think Zach mentioned microbiome. It's like thinking about our gut biome, but for the soil, keeping that soil covered, and then integrating livestock when possible. So I'll leave it there, but.
No, anything that's, and maybe a step further is how does it benefit the climate and increase profitability as sort of that next step?
Yeah. So maybe I'm a bit too cautious. I say any farming system is not guaranteed to be profitable. But I think that it benefits the climate in this way. So climate smart practices are certainly involved. So we could touch this mitigation topic of drawing down our emissions. But it's supposed to really build resiliency. And I think the simple example of that is what happens when water hits bare, dead soil versus lush grassland. There's a different absorption, there's different runoff, and there's all sorts of ecosystem variables connected to that. So that's how it does both. It mitigates and builds resilience.
Yeah, Zach first and then, Peter.
Just to add a little bit color. So when you get to it, it's just like our gut. We need to maintain a certain pH in our gut. When the pH gets in balance, bad things happen. Same thing happens in the soil. When the pH is in balance, then you start to attract different type of microorganisms that then start to affect the soil in non-meaningful ways. And then what happens is, as that soil becomes less useful, then our current practice we need to add more stuff to it. And that's what happens. Every year we add more and more of the industrial inputs to keep up with the previous yield. And so a lot of that's a function of pH, and also the pH is a function of how much air is in the soil, the aerobic nature of the soil. So if you start to recorrect the aerobic nature and the pH, then those are through regenerative practices, then you're able to reduce the industrial inputs, and that's saving on CapEx, OpEx, and a few other things.
Real quick, I didn't want to downplay the profitability. I think it's equity in the ground, because I've been to a ranch that's quite successful in this, and he keeps buying parcels of land that used to be peanut farms next to his property, and you can go down the fence line and see pretty dead looking soil versus really lush soil. I have to believe that whoever is financing his purchases knows that there's money in that land.
And Driscoll Farms. So we sell to Driscoll Farms, and they'll pay by a certain metric called the Brix Index. So farmers who have sweeter strawberries, the more sucrose, more Brix, they get paid more than Farm B. And so if you do these practices and you can return to agronomic ones, then you're able to increase the Brix Index. And for those particular farmers paid on that scale, they get more money.
And not to throw some cold water on some of this here, but there was a recent study that 60% of small farms in the United States, small farm owners or people that run a farm actually need a second job to actually, have an income to actually pay for everything that they need to pay for in their lives. So the challenge of driving adoption, did a recent study with the Nature Conservancy and with the HSBC Foundation were involved in as University of Michigan on what limits the adoption of regen ag, in particular row crops, not dairy, right? And so they say, well, one, are you an owner of the land, or are you, I guess, a renter where somebody else owns it? Big difference as to whether or not you're actually going to do it or whether your landlord wants you to do it. Then are you already, if you're an owner, have you been applying regen ag because you think it's good for your land and good for your soil and good for your asset value? And are you then not getting rewarded, whereas those, I guess, that are getting onboarded with subsidies and everything else are actually getting, paid to do it? So you have people that are doing it that are getting paid, people that are not doing it and will do it for, a payment, inequity over there. And then you got the landlords versus the actual owners of the land. So a lot of issues, I guess, that we need to tease out. It's not a one-stop solution.
I agree that the leasing bit is
Leasing bit, yeah.
Just added to my list. I think I'll have to invite you to our workshops in the European ecosystem. We have a landscape approach and $15 million training for farmers. And what I want to do is integrate the entire value chain in that. And what we define it is basically we're asking farmers to grow soil. And then we have to find the financial incentives, not only from the crops, but also from the nature benefits. So can we pay for them for the natural capital that they're bringing, or from the ecosystem services, climate? So this is sort of the integrated type of financial models we're trying to integrate into that. And then also working with the off-takers, with the retailers and the manufacturers, because one thing is that the risk of regen is that you can't be guaranteed a specific crop. And so when people ask, what do you grow? Most of the regen farmers are like, oh, well, it depends. And it's integrated, and it's complementarity, and it's experimental, it's consistent. And the big question is, how do you, it's seen as another fad by some, as a policy fad. And so in Europe, with smallhold farmers in particular, they're saying, we have invested in the Green Deal and in green and sustainable agriculture. And now you're asking us to shift models again and put our huge machinery aside, no tilling, etc. How can we finance this transition, and how are you going to guarantee we're addressing the risks and the finances for it? So that's again the pre-competitive approach of the European hub, and then working with the WEF globally with the food innovation hubs around the world, where especially the ecosystem and climate and water systems are so fragile.
Darren, I'm watching the time. I know we've got a little bit of time left. I don't want to get you run late. Last question on this topic, then I'd love to open it up to folks if they do have questions. I guess for anyone here, what are we seeing in terms of the bifurcation of adoption of these types of processes, right? Like farmers just want to farm. They want to do that where they want to make money. They want to be able to put food on the table for their families and, live their lives. These practices are changing what they do, how they do it. It's difficult. It's nerve-wracking. It's all the things. So how are we seeing in terms of the policy, the finances, all of this huge ecosystem that's impacted them? Are we seeing a bifurcation in the adoption of these types of practices? What does that look like? How do we sort of bridge that?
I'll just say for our farmers, so we have quite a few growers, both in the US and international, and Brazil, UK, Europe, and Japan. A lot of it is, show me the money, show me that this actually can happen. And by using good data, I've been able to see growers, their children actually come back from the cities and go back to the farm, as long as they've been shown that it's actually going to be worth it to bring their families out of the urban environment back to the farm. You can have a livelihood. And so being able to demonstrate with real data, real use cases, I'm seeing people go back. And so I think we need to continue to show great use cases. And I know that we have some exciting ones on how we can improve IRR for row crops by integrating the value stack, which most people don't even know about that we can do. And as that becomes more kind of well-known, then I think we'll see return.
I think some of the bifurcation also comes on how we talk about this opportunity, right? When we talk to the Farm Bureaus, I mean, the initial reaction is a negative reaction. We're not going to do this. All we've ever heard is the stick, right? So you really have to sort of argue it more. So you should do it. It's good for climate and blah, blah, blah. So basically you have to talk about it from the perspective, what is it going to do to my P&L, right? Where is the new opportunity? Where is the new value creation? So you have to sort of provide an optimistic, financial picture, with the farmer that, yes, this will deliver tangible benefits. And I think that's kind of where, are you on this side, on the pessimistic side, or are you on the, this is how we're going to enable you to increase your revenue and your ROI.
I've got lots more questions to ask, but I do want to open it up. Yes, you in the back.
This question is to Mike and Catherine. I had the pleasure of speaking to Mike earlier, and believe it or not, within the last week, I've brought up the discussion of cows burping twice. So
Sorry.
It's definitely a serious problem. I know on the measurement, I think there's a great digital solution somewhere around here for the measurement of that. But on the tech side, as a trade organization or as also a member of the World Economic Forum, do you make recommendations to the memberships, to your farmers? And I would assume that there's more than one tech to solve this problem.
Yeah, may I start?
Go ahead.
In brief, we educate before we make a recommendation. We don't like picking winners and losers. But as an example, I have some startup phase enteric methane companies coming to speak in a fireside chat with my CEO later this fall, for example. Because there's a vaccine route out there, there's microbiome solutions, there's feed additives, there's tech that the cows can wear. There's a variety of things that are entering the marketplace. The other thing we do is we try to find ways where we can work with USDA to facilitate the uptake and research and financial assistance for growers and producers to try new things. So Zach, you mentioned something to this effect, that some new technologies or project types might not be defined. There's an interesting bill called the Sustains Act being implemented right now. So we've been trying to advocate for, let's call it feasible implementation of that, where my member companies can direct based on their expertise with past projects or interest in new technologies. And at the end of the day, it's a fund matching scheme. So one of my big companies can put up some money and receive up to 75% fund matching from the USDA. That's a good way to get some new things in the marketplace. Those are a couple ways that we get involved in that area. Katherine.
For the EIT food, I mean, we do across the board. We do, research and startup acceleration, as well as collaborations with the corporate and other partners across the board, including NGOs and the credit providing institutions. So it's more pre-competitive. And for the WEF, then some of the work that I'm doing is going to feed into the technical reports. Like we have a soil tech report, and hopefully a methane one will come forward at some point. But again, it depends on their corporate partnerships and what they're looking for. But what I find really interesting about this is the multi-impact side of things, because when we focus on methane reduction, there's other benefits to some of these technologies or formulas. And a lot of them have already been in the market and FDA approved for other benefits, output, longevity, well-being, that can also be incentives for farmers themselves and for the corporates up the stream. So again, we can address various challenges with the same product, but it's really about ensuring we're matching the value proposition with the right challenges.
And just to add on that, so it's, I think, very difficult for there to be single companies doing their own thing and changing the paradigm. And what's great, at least from my experience with True Algae, is that after we receive the credibility of the individual farmers and the distributors, now we're actually being added to the products of these large agrochemical companies, reducing their own negative environmental effect, but improving their efficacy. And so it's then also by being intertwined with the largest kind of impact industries and companies, that's how you have a massive scale change.
And a final shout out, I mean, it's also the data that we can collect on these, and why we need, organizations like Triangle to provide sort of that platform where we can sort of integrate and layer up some of the data to unlock the different financial mechanisms that we could use to put these into place.
Just to even go down, we've estimated just in the Great Lakes area, which is something like $20 billion worth of loans, right, out of 800 billion, I mean, across the entire United States. There's 1.5 billion tons of carbon equivalents that are being emitted every year. I mean, that's a lot of money left on the table that we're trying to recoup somehow, redistribute across that value chain. So the data are there, however granular and however good. I mean, that we're going to leave that to Darren, I guess, the whole veracity, I guess, across the whole supply chain. That's no pressure. But if you look at the order of magnitude of what sits there, I mean, there's a massive opportunity for deployment of tech and verification and MRVs and whatnot. Yeah.
I think we got time for one more question. Saw you in the back.
Hi, we have a number of clients in Europe who are in both dairy and in other animal livestock areas. And of course, there's a lot of fuss about farting and burping, but we actually find that in Europe, just as important is going to be the emissions from the feed, animal feed. And for Pogue, it's actually by far the biggest source for emissions.
Yeah.
I just wondered if you've got any sort of particular comments on that and how you're helping your members in terms of animal feed.
I can jump in real quick on that one, not just pork, but also poultry.
That's really, yeah.
And so we have been able to demonstrate through improving gut microbiome, which is part of enteric, issues, then you are able to reduce feed ratio, the feed efficiency ratio. And that means that all of the fossil fuels or whatever is used to create that feed gets reduced. And I'm seeing gigaton levels of abatement just for poultry. Think about it for the other animals.
We're trying to do full value chain interventions. I think because of time, I'll just say my proposition is that willingness to pay from members like my big manufacturers is going to increase if there's more assurance behind the numbers connected, because we're just not sure yet in some cases. When that happens, I think that we'll have some more partnerships.
Mhm. I think it's basically a domino effect, right? We are working across, sheep, pork, chicken. These formulas exist and are constantly evolving, but it's also the mechanisms behind it, and ensuring that those are in place so that we can then, slot them in where necessary.
And we're tying our LCAs into the platform as well.
Yeah.
And so, again, transparency is key.
What's else you just?
Sure. The life cycle analysis for folks who don't know. And so that basically is measuring all the scope of emissions from the production all the way to the utilization of activity or product.
I did get clearance for one more question. I did see a couple. Cool. All right. I saw these two. We'll do them back to back and we'll call it one question.
A and B.
This is Jingxie from Solely Partner. So specifically on regenerative agriculture for cash crops, high calories in around Midwest and that region. So when we try to do more regenerative agriculture, obviously we want more loans, also want insurance. To scale that up, what are the specific data we would need to collect? Is it the yield for loans, or is it soil carbon? Is it microbial? What are the kind of data? Where are they? And how do you think we could get that data?
But keep that question in mind.
For the panel, but for Katherine particularly in the EU, what kind of barriers to adoption are you seeing by farming community to regen education particularly? And what kind of tools are you using?
Let's start with what kind of data do we need? I assume Peter is probably.
We need Form F data from the farmer. We can't get that. Only the lender can get that. Nobody else can actually see it, neither the off-taker or anybody else. But that is actually important data we're trying to get through machine learning and other ways to help unlock some additional financing.
And I'll add, I think it's still evolving a bit because I've heard some folks in my industry talk about like an ecosystem services credit, for example. Hypothetical, maybe not just carbon, so thinking beyond carbon. But you did mention soil carbon, and I know some of my member companies have looked into that, and as well as some metric of biodiversity, like microbial biodiversity or other on-site.
Mm-hmm. That's actually what we're addressing right now, is trying to map the various instruments and data that would be necessary, and that's why the digital platforms are so important here.
Really quick on the data, you said you
Yeah. So we look at the macro and micronutrients of the actual crop itself. And so that helps determine if the climate smart approach you're taking is actually leading to a benefit, so that you can actually marshal more of the goodness, the nutrients, the soil to the actual crop, which then leads to it being able to be sold and not rejected. And so that's where you get into the insurability.
Now, Katherine, barriers in the EU.
Very quickly, but we can talk afterwards. I think, the EU is a special breed of region, right? And the EU mechanisms and institutions like mine, EIT Food, is established by the EU and provided with funding to do specific mission-based approaches. And so that can help us bypass a lot of the political national level vacillations that we might see. Like Netherlands right now has just shifted governments. So all of a sudden we've gone from a region focus to old school. And that will happen. So what we're doing is a landscape approach by clustering regions, countries, and then offering a training. And that training is evolving because we bring in stakeholders and do that sort of vetting of what are the challenges? What do you need in order to make this work? And then we evolve the education and training, not just for the farmers. It has to be for all of the stakeholders. And the beauty of the approach is by bringing in some of the corporate representatives. So we have Unilever on our mix. We have other big, PepsiCo is one of our partners, and others. By bringing them in and understanding their pain points along the value chain, the needing, 1,000 hectares of regen, that's going to be a bit of a challenge. How can we actually fit into their pain points and then feed that back into the training loop across the board so we can evolve it? It's hard though.
Farmers want credit for what they're doing today. That's a big barrier.
Not future.
And in some cases, there's overlap between regen practices and conventional practices. So my farmers, I hear in the US, they want acknowledgement for that. And then I think the market sorts it out a little. Certain brands can go after legitimate claims and market regen differently than other brands. So that's what I see happening.
One final thing on the European customer, what we're seeing is actually the younger generation coming in and wanting to get back to the farm and wanting to do regen, which is really interesting because it's a bit of an intergenerational element as well. And that's a cultural, intergenerational thing that policy can't really address directly, but finance incentive can.
I'll take a moment of moderator's privilege and say thank you. These folks will be around for a little bit, so with more questions. I do want to say, we've been able to talk about ag. I think what we'll hear over the course of the next couple of panels is data is key to everything. It underpins it all. And to be able to understand what the data says, how do we get it? Where does it lead us? And what opportunities are available to utilize that data for additional purposes, I think is going to help us solve the climate, which is why we're all here. Despite all the traffic outside wasting, I can't even imagine how many millions of gallons of gasoline, but we're here and we're going to solve the climate. And I think Triangle has a tool that can help us to realize that. So thank you all. I think we solved it, so we're good.